Hey, welcome everyone. Exciting news. The VXX, which is our signature product that we had given everyone beginning settings. Now these, again, on the Person Algo Optimizer, when we have, this is a particular product that allows individual users to program and optimize settings to maintain their own trading systems or strategies. So what your holding period is it 10 days, 20 days? Who knows what the best performance is in an individual market for in specific time frames, right? So a 5-minute might have 12 bars, a 15-minute might have 4 bars, a 60-minute, a swing trade model might have, to hit its average best profit over time, might have 20 bars or 40 bars. Why guess when the computer will optimize for you? What you need and what will help investors is to have a program that allows you to create the information that you seek, and therefore you can validate whether your trading ideas are good or not, and that's called, in essence, backtesting. So different markets have different characteristics about them. The VXX does not trade exactly opposite of the S&Ps. There's another issue that they have as far as valuation, and it's an exchange-traded note. The difference between an exchange-traded fund, an ETF, and an exchange-traded note is this product, an exchange-traded note, trades off futures. So this product trades off the valuation of the 2 front-month contracts of the CBOE's VIX futures, and those products trade off the VIX, and the VIX trades off the valuations of the S&P's demand for puts and calls. Demand for puts and calls depend on the valuation of the index. The index is what? Derived by the supply, demand, or pricing action of 500 individual stocks that are weighted against the S&P 500. So this is a dynamic product in essence. Why we came up with this trading system and what works for us. And I know a lot of people have been very interested in the Person Algo Optimizer. They want our settings. I get that. But this is something that we created and gave out as basic strategies so that individuals can continue to maintain and build their own systems. But I will share, as we have gotten some questions on performance, and someone had asked for, hey, I want all these products for a 5-year back test. I want a 5-year back test on this, a 5-year back test on that. Well, that's great information to want, but 5-minute euro currency has different dynamics today than it did 5 years ago. And that's why maintaining a system is decent. Also, time of day. Were there better trades at 3 in the morning in the euro currency and better trades at 4 in the afternoon, maybe, U.S. time? You know, those are good questions, and I'm sure you would want answers for that. In other words, is there a way to optimize to say what's the best time frame for profitable trades? Is it in the 3 o'clock to 6 a.m. session, U.S. Standard Eastern Standard Time, or is it from 11 when the market European session closes, right before the close, to 2 in the afternoon? Those are great questions, and the optimizer will answer those questions for you. But this is the dating back since when it first originated back in 2009. So we started from 2010 on a $100,000 account. Basics. This is the rate of return each year on the signals. Now, will your system be different than this? Possibly. Execution matters, but of course, right? But we want to trade something that's liquid, and the VXX is more than liquid. It's probably the hedge fund community's one of their top favorite markets to trade. So basically, this year we're almost up 100,000 year to date, which is staggering. It's incredible. We just had almost a new equity high. Here's the performance graph. Then that green dot signifies it is a new equity high for the system. Performance summary. So this is a performance summary, by the way, since 2010. So you want to talk about volatility. This covers the 11 crash. This covers the 16 crash, the rallies. But either way you look at it, look at the short trades. The profitability, almost 2 to 1, is makes more money on short trades than long trades. So here's another thing that we like to teach people. There's certain times that you turn the long trades off. In times of volatility or anticipation that we're going to go through a correction, or perhaps we're going to go through a period of pullback. If the stock market pulls back, then the VIX, you would want to turn on longs, right? So, or you want to make sure that your long trades have extra confirmation. What does that mean? Well, are we closing greater than last conditional changes? Are we taking high close dojis only? Are we taking any buy signal like a PPS, anything like that? So we can go down, and if you notice here, the shorts do a lot better. Looking at the dynamics, I mean, most people would like to see a Sharpe ratio a little greater than 50, but this is close enough for a basic strategy. And again, this has not been what I would say curve fitted to. Well, the word I'm looking for, curve fitted to adjust for a couple trades. One trade is, in fact, back in February, the greatest trade of all was that it was long before the big kahuna breakup. And this system had a profit target that maxed it out. I mean, the max profit was hit. So if the max profit target is hit, guess what? It's going to get you out of the trade, because on average, up until this point in time, prior to this, the average basic max profit was that amount. And so it says, get me out. Now, if you want to trail a stop and not have a max function, then the Person Algo Optimizer has it. But we didn't build that in the settings, and we've been trading this since last year, 2017. So again, this, obviously, it was nice that the darn thing was long to begin with, and this would have been approximately a $56,000, or from signal to high, about a $70,000 move in one trade. That's what that represented. A 70% rate of return on $100,000, trading a $100,000 account and being fully traded and fully vested, meaning trade as many shares of this product as possible that $100,000 will allow me. Would have been approximately 3448 shares. And so it did. It got out. But what did it do? Well, since then, it obviously traded the short side, the long side, and it's been trading, and not every trade's a winner. Red, if you can see here, when it gives a red signal, those are losers, right? Blue are winners. So it's given some really dynamic trades in the market. Now, down below, this is your strategy equity curve. What this means is that green is closed out and fuchsia is open. As you can see, the two met, and so that means it's now flat, and you can clearly see it's flat. So this is a trade. The last video we did, we had mentioned that the system was short, and it just covered on the open today, and it left a little money on the table, but it is what it is. So looking at the performance, this is really exciting as far as a trading system for anyone that's looking, whether you want to trade $100,000, whether you want to trade $20,000 devoted. You can always break this down and create your own strategy on these signals and the optimization function. So again, a really dynamic performance, and as you take a look at how much time is it in the market, it's not quite 100%. It's only in the market about 83% of the time. So it is something that would consume some capital. Drawdown factor might be a little heavy for some individuals, but this is, again, a really phenomenal rate of return and a pretty stellar equity curve for anyone that's beginning in trading. So whether you're trading this and outright auto execution, or taking the signals and trading it via options on this product, or manually looking for signals that you can take, either way you look at it, it's a fantastic product. So I wanted to go through that step by step. Every different product has different characteristics, and so again, looking at the markets in terms of volatility, and for the last 8 years, as you can see, the market has not been straight up. Everyone knows that, right? 2011 we had a correction, and what did this thing do in 2011? I mean, it did pretty well if you take a look at the equity curve. This is June of 2011. Look at this is September 2011. So even in worst of times, best of times, and yes, it does have a little bit of drawdown function in here, but the equity curve has just done marvelously well. There was a period of stagnation in 16, as you can see here, that didn't do that much, but it already had an incredible year in 2016. I mean, yes, granted, only up 42,000 for the year based on a $100,000 account. The next year, 43,000, but the prior year up 180, up 79. So, excuse me, we can look at this market and say, on average, what does it do? It's getting up there as far as it's done better over the last this year, which this year is just begun. It's not even half over. Well, it's not just begun. We're more than a third over. But what I can say is that if we can expect this kind of return, are we going to get one of these years? Are we going to get one of these years? We might get one of these years where we're only up 143. But there's still, I think, that the neat thing is that we're not going to go in a period of low volatility. And what's great about or lower volatility where the market stops moving, okay? That's what I meant by lower volatility. The market's not going to stop moving. What's really neat about this product, what people don't understand, if you keep selling and it goes short, it gets short, it goes short, it resets and they do a reverse. This thing is done 4 times. It's done 4 to 1 reverse splits. So if the thing's worth 13, the next, or goes to 11, for example, it'll be worth 44 the next day, and then again your shares or your size is diluted by 1/4. So again, this is a product that keeps resetting itself, and that's why it makes it such a dynamic trade system for investors that understand algo settings, that understand the market. So it is very special. Let's look at a couple others real quick. All right, this is Apple, and Apple's had some, as you can see, the signals here. Short doesn't get out at the very low. Longs doesn't get out at the very high. Went short, a little loser. Went long, got out on a trailing stop function, went short. I mean, this is done, I think, as anyone can anticipate, a pretty darn good job in a trading range environment when everyone thinks the market in February was going to crash. It had already been short. When you think the market's going to go down, it covered the short and it actually reversed and went long. So it left a little bit of money on the table. But this is this year. Let's take a look at the overall performance and look at the equity curve on this. This is a base model. Okay, and this goes back since 2013. So this is a 5-year system. All right. Now, a 5-year system, you could take a look at the profit factors, the net gains. Is there better systems out there? Probably. Is Apple one of the greatest markets to trade? Not really. I mean, I think as far as it used to be. But look at the longs. It does better on longs than it does on shorts, which is indicative of a bull market, right? But not to say it doesn't make money. We need a little bit of work on its shorts performance, but the longs, it does pretty well. 57, almost 56.63%, almost 57%, but almost a profitable ratio of 2.73 to 1, almost 3 to 1. In 5 years, it's only done 167 trades. So based on the market, how do you have, if 5 years ago, you take a look at the valuation of Apple pre-split, and that's the problem with splits and in backtesting an individual system on an individual stock, right? You have to adjust for the pricing difference. So the volatility, if Apple has a $4 average range, right? Or a $20 average range in a month, or doesn't move that much, you're not going to generate a whole lot of signals, right? So basically, this system has only been in the market half the time. So some people love that function, right? It's the rate of return is fantastic. Return on accounts 991, return on initial in capital is 128%. Buy and hold returns 194. So some people would say, I don't like that. Well, that's okay, but this system makes money. Account size required and drawdown. Look at that, $3,500. Only $3,500 on max trade drawdown. Not too bad of a feature, right? So on the last 5 years, has Apple done well? Well, it's only been in the market in the last 5 years, or 4 years, 9 months, and 19 days. Less than half the time, 46% of the time. 46% of the time, it's done a pretty good job of giving you a return on investment. So you can, again, this is based on a $100,000 account. So if you think about it, not a bad rate of return each year. Now, this does not compound the trade system. It only trades based off $100,000. All right, next. That is the Apple model for almost the last 5 years. So can you do better? I'm sure people could do better by compounding options and being directional. But this is the system that generates the buy and the sell signals, and I think anyone would be happy with a consistent rate in Apple's terms, right? In Apple's terms. These are not bad rates of return on any trade system, especially in these time frames that we're looking at. So let's take a look and double check one other function in the market. So my point about backtesting a system, I mean, if you look at the dollar amount, okay, back in 2013, look at the move in 2013. You'd think, well, it didn't have a great year in 2013, but if you take a look at the market from range from low to high in 2013, so here's 2013, here's 2014, here's 2015, right, here's 2017, and now 2018. So it looks like the bulk of the big move acceleration, at least trend, was in 17. Right? And then again, you had 2014, big move up, right? You had a slight move to the upside here, and it looks like the majority of the move happened at the last 3 months or the last quarter of the year for Apple in 2013. So in 2013, literally from when the year began, and you go through and you go, nothing really happened. It didn't move until the last quarter. So if you weren't in the market in the last literally month and a half, 2 months. Let's take a look at this a little closer. And I'm gonna go over and hit escape, and let's take a look at view data window real quick. And I mean, when did the rallies begin? It broke out right here on that PPS buy signal in July. So there's July of 2013. There's the PPS buy signal. The move started to happen in August. And then, as you can clearly see, here's where the big bulk of the breakout happened, October 10th, that week. And that's when you got the major leg to the upside right here, was October, November, December, 8 weeks. The vast majority of the rally happened in this leg of 5 weeks and that leg of 8 weeks, and that's 2013. So if you weren't in the market those times, you missed the big move for the year. In 2014, it looks like the move happens right here, and then again in 2015, nothing happens. Apple just goes down. So yes, if you bought here at $60 and held and got up to 189, that's a great trade just to buy and hold in Apple, plus again dividends and splits, etc. Or again, they haven't really done that, but at this point in time, what we could look at is the performance and say, well, what has the stock done? And then when you go back and you say, wow, geez, you know, to be honest with you, it really was 2017. Now let's look at Apple again and look at that performance one more time and say, what did it look like all those years that nothing really happened? You still made money with the same parameter settings now as you did then. And in 2017, it missed a lot of the moves. It didn't really do that well until actually this year. So this year in 2018 is the bulk of the profits for this system. So you didn't do bad over time, but you know, some years were better than others. So you wanted to break down. That's what I wanted to do, is just break this down for you and say, well, was it straight up? I mean, what happened in 2017? And that's where we define a trading system to say, well, what is it that you want it to do? Did it have significant drawdowns? If we take a look at this chart, this graph, and you can clearly see, no, it's a pretty smooth equity curve. You know, it just didn't do as well as buy and hold, but it did give you a better rate of return on the money you invested for the amount of time that you were in. So it really did outperform. Sharp ratio is less than Most people would like to see, want to see a 40, but again, these are basic settings, and as you can clearly see, you can obviously change that from short trades to long trades, and then you can improve on your own settings. These are just the basic settings that we give out for our clients that purchase the Algo Optimizer, so they get a feel for how to optimize and move forward and adjust for changes of volatility. What do I mean by volatility? Let's take one last look at that. Changes in volatility have to do with volatility as far as price swings. So in 2018, it's been a pretty rough and rocky road. You can see we've seen some really big swings in the market. In 2017, when the system didn't have as great as a profit, you can clearly see the bulk of the move happened in the beginning of the year. I mean, there it is, right? January, February into March. And then for the rest of the year, kind of got choppy, sloppy. One big breakout, probably an earnings report. And even 2017, which really didn't do much, if you think about it, from the old highs of 2015, it didn't really do much. It finally broke out from 2015. You have this high that the market had. So trading Apple on a system did better for you than buy and hold, actually, and it depends on where you bought. I mean, obviously, if you bought here, did you get stopped out versus trading the market? So what we want to use a backtest study for is to say, what did it do in good times and bad, and what did it do when a system lost? And what was the drawdown feature when the market was in a bad trade? How bad was the drawdown? What to expect moving forward? Again, past performance is never indicative of future price performance. But for a trader and a trading system, this is a dynamic setting that worked well in low price volatility. In other words, the market was trading in the 50-60 range, and high price volatility where the market's trading now between 160 and 190. So we have a range function that is traded a little bit better, and you're starting to see bigger swings in these interval times on an intra-week basis. All right, let's look at one last market. When we first started this product in 2017 and brought it to investors' attention of how they can get better performance, Bitcoin was obviously, we did this at a May money show, and at the time, and let's go back to 2017 in May, Bitcoin was starting to get a little popular, at the money show because it had a little bit of a breakout. And what we found was it was hard to trade Bitcoin per se on any functional platform. And then this product, which was GBTC, an over-the-counter, which they call an OTC product, hard to borrow with TradeStation. It was giving some, erroneous trades. Obviously, it had some decent trade setups, but, Bitcoin wasn't really moving. And again, GBTC had a reverse split, so it's valued different now than it was even back then. So, but with that stated, we started to see and programmed a system, and as you can see, longs, and it got up near the profit target. I mean, I can't explain why these profit targets work like they work, but as you can see, here's a long position, and it got out of max bars, its holding period. Then it got long again and hit a trailing stop function before a big kahuna run-up. That just happens. That was back in May. But then what did it do? It got right back into the fight. It went long. It took the profit. So, it's a trading system that can a discretionary trader do better? Possibly, but this will execute and get you into trades you want to get in but can't because either you weren't there at the exact precise time, the signal was too risky and you hesitated. This is going to just execute for you. But while the same thing happened with the system, it missed a big profit as it did with the VXX in February. Remember, in February it went long and it took a max profit, and this thing did the same thing. It took a max profit based on its historic amount of profits or moves that it would do. So up before that point in time, this thing did what it was designed to do. This is not curve fitted to adjust for this one big move. That's the neat thing about this. So while some traders would say, hey, I missed this trade. Yeah, but you know what? This was a once-in-a-lifetime type of situation because guess what, friends? It wasn't making those kinds of moves because the valuation was different. Now, if you can foretell the future and say, I think tomorrow it's going to move up greater than 200% of its average ATR, then knock yourself out with that type of premonition. But I don't think any of us are capable of that. I guarantee you that. And I've only done this for 38 years, right? So I've not been able to see that. What I do see is that the system was able to take a profit and then look for a new signal. It took the signal and it got out right when it should have and hit a profit target. It took a long, it made some money, but then gave it up. Went short, gave up a little bit, and you can clearly see there's a little drawdown in here. So it got chopped up, it gave back some profits, went long again, and did a wonderful job at doing what it was designed to do. Is every single trade a winner? Does every single trade take its max profit like to the trend exactly to the highs? No, but what it does is it takes signals, and over time it does something that it's supposed to do. Generate growth in its profitable equity curve. And that's what this thing has done. And that's what traders want to see, consistent profits on an equity curve. So, I mean, this is not a new product. Here's the equity curve. This is a hard-to-borrow product. It's GBTC. But the point I'm trying to make is that in the performance summary, it's got an unbelievable long versus short performance. It's done better, obviously, with Bitcoin on longs, and it's not just one single trade. It's not like it just made all this money on one single trade. So this goes back since May of 2016. So this is only 2 years because, friends, it hasn't been around that long. So you can't do a 5-year backtest study on something like this. It's done 53 trades. It's done just as many trades in the last 2 years as Apple did in 5 years. Now, this, again, is a daily chart. So is it long enough to generate enough trades? Well, some people would like to say I'd like at least a 2 to 3, 5-year, 10-year backtest, and I'd like to see at least 300 trades. So that's why day trade systems, you know, if you get in asking for a 5-year backtest or 10-year backtest on a market using a 5-minute basis on futures because of either rollover, valuation changes, they mean the Dow today does not trade like it did 5 years ago. Let's face it, intraday volatility in the S&Ps right now, we're trading over a 40 handle ATR. And in October of 2017, we're at 9 points on a daily basis. So it's like comparing an apple to a pineapple. They're two different beasts. So again, you need to maintain a trading system, and that's what the Algo Optimizer has done for you. It allows you to maintain a system with the proper training, the proper education of how to utilize this and when to maintain a trading system for the changes in volatility and price swings in the market. I hope you found this video helpful and explanatory on what the product does for people, why people need this product, and how it's been so helpful in determining incredible buy and sell signals in a very efficient computer-generated trading world. Thank you very much. And again, if you have more questions, simply go visit the website where it states trading system, and I'll bring that up for you guys so you can see that directly. If you go to personsplanet.com, which you're on watching the YouTube channel, and I'll bring that into function, and just go to where it states right here, Algo Optimizer under Persons Indicators, and you can read some more information regarding the product, its pricing, and what it comes with. Thank you all very much.